Today, we will talk about loss carryforward. A loss carryforward is an accounting technique that applies the current year's net operating loss to future year's net income to reduce tax liability. For example, if a company has negative net operating income in one year but positive income in subsequent years, it can use the NOL carryforward to record some or all of the loss from the first year in the following years, which lowers taxable income, thus reducing the amount owed in taxes. Before 2018, the IRS allowed businesses to carry net operating losses forward 20 years to offset future profits or backward 2 years for an immediate refund of previous taxes paid. Since the Tax Cuts and Jobs Act, the carryback provision has been removed, the carryforward period is indefinite, and carryforwards are now limited to 80% of each subsequent year's net income. NOL carryforwards are recorded as assets on a company's balance sheet and offer a benefit in the form of future tax liability savings. The provision was originally introduced as part of the Revenue Act of 1918 to help companies incurring losses related to the sale of war-related items maintain a smooth tax burden. Businesses should claim NOL carryforwards as soon as possible as the losses are not indexed with inflation. Each year, the claim effectively becomes smaller. For example, a $100,000 loss claimed 20 years later is less likely to have the same impact due to inflation reducing its real value. If a company loses $5 million one year and earns $6 million the next, the full loss from the first year can be carried forward to the second year as a deferred tax asset, which is limited to 80% of the income. This reduces the taxable income for the second year and leaves a deferred tax asset on the balance sheet. Here are 3 key takeaways. 1. Loss carryforwards are used to spread a current net operating loss, NOL, over subsequent years' net operating income, NOI, in order to reduce future tax liability. 2. The Tax Cuts and Jobs Act, TCJA, removed the 2-year carryback provision, extended the 20-year carryforward provision out indefinitely, and limited carryforwards to 80% of net income in any future year. 3. Net operating losses originating in tax years beginning prior to January 1, 2018, are still subject to the former carryover rules. Hope this would help. Thanks for watching.